Good afternoon. This is Todd Horwitz, coming here from the floor of the CME Group in Chicago. And as we've been tracking gold, and last week we posed the question, bull or bear? And of course, we've continued to rally. And in fact, last week was what we would look at as almost a blow-off top of the near-term rally of this market. But I think a lot of this comes down to what the Fed decision is going to hammer out and show us. Of course, that meeting is in a couple of weeks. But I think what you've now seen is because of the manipulation in the dollar and because of a lot of the things that are going on in the general economy, the Fed is trying to artificially force rates lower, which makes the dollar go lower, which then does add support to gold. And of course, gold is up against these tops after having a pretty monster rally. I mean, we're looking at over $100 rally in the last 21 days in gold, which is just a tad too much. Now, long term, we're very bullish the gold space, but short term, we think they're going to test back those lows before they actually do go ahead and take off to the upside. Especially when these rates start to get away, you're going to start to see a little bit of a stronger dollar, which should put some near-term pressure. Long-term, very bullish. Short-term, we're looking for a pullback. So right now, we're looking to be a seller, and we would be a seller of gold at the 1345 to 1355 level, looking for a pullback. Again, we're eventually targeting back of a test of lows of about 1240. But in the meantime, it will be choppy on the way going down, especially if we start to see a little bit of equity sell-off. You know, we're starting to see some more volatility. So that might drag some money back in. But overall, the markets will then tell the truth, which is actually we'll see a higher dollar, which should push gold down. Technically and fundamentally, gold should have a little bit of a pullback. So we're looking for targeting 1240, but would be a seller at 1340, 1350, and then monitor as it goes down because there will be some stopping points, which we'll continue to cover. That's the way I see it. This is Todd Horwitz, coming to you from the floor of the CME Group in Chicago.